Apple's results have our next guest increasing his profit outlook and stock target. Brian Marshall is with us now. He's an analyst at Gleacher Co. Brian is a Bloomberg best, meaning his predictions in the tech sector are right on the money. He joins us from San Francisco this morning. Brian, so glad to have you with us. Apple beat the street, had its first $20 billion revenue quarter. Steve Jobs showed up on the conference call. But there are some weak spots, some chinks in the armor, it seems like, at least if you are looking at iPad sales. What do you make of all the data?
Sure. Yeah, I think, Deirdre, when you look at Apple holistically, the overall top line, the overall bottom line far surpassed expectations. So net, I think that's a positive. As you pointed out, there were a couple areas that could have been a little bit better, namely iPad as well as gross margin. So, irrespective of those two blemishes, I think it was a very solid print all around.
So, Brian, what do you advise then, or at least what are you doing as far as the price target goes and as far as what you expect? Because gross margin is something that everybody in the tech sector watches pretty closely. Should we be concerned about that?
It's definitely something to look at. I mean, we're being pretty conservative with the trajectory of our gross margins going forward, but at the end of the day, even with those conservative assumptions, my calendar year 2000 EPS actually increased pretty dramatically to $20 overall. So I'm actually raising my stock target for Apple by $10 to $355 per share, up from previous levels of $345.
Brian, how much do you think that Apple really has to defend its territory against Google's Android? That seems to be one of the reasons, when we poured through some research this morning, that the gross margins did take a hit.
Yeah, that's a good point. The company does have to add and integrate additional functionality into its next generation products. For example, the iPhone 4. So we're definitely seeing increased bill of materials on the iPhone 4 as well as the iPad. And so to make a better gadget, if you will, relative to the competition, that costs money. And so we are not seeing the margins that we have historically. So I think you make a good point.
Brian, as far as the tablet business goes, we know Apple has pretty much had a lot of good traction with the iPad, but how unpredictable is this market? I mean, we know that Steve Jobs said, look, competitors are going to be dead on arrival, but do you think that's the case?
Well, I think the market is going to be fairly large. I think I'm forecasting roughly 50 million units next year for global tablet sales. I actually have Apple at around 30 million units next year. So I think they'll definitely have the vast majority of it. There's going to be other vendors. Obviously, Apple's not the only game in town when it comes to iPods or iPhones, that is. And so we think that the iPad market or the tablet market will be pretty similar. Apple will continue to have the lion's share, and there will be some other successful parties out there as well.
Brian, do you think it's okay that Apple stays with the upper echelon, meaning the bigger spenders, and lets Google's Android have sort of the medium price to lower priced products?
I do, up until a point. So we have roughly 5% unit share of the global handset and the global PC space. This is Apple. So once we double that and get closer to double digits of global share, roughly 10%, I think that area of increased, value out there is going to be diminished. And so I think the company's going to have to start to offer lower price SKUs, if you will.
All right, we could see a price war. Thank you very much, Brian Marshall. Great comment there. Brian joining us there from San Francisco by telephone from Gleacher & Company. Brian is a Bloomberg best.